Today, we saw Apple making its way back up towards trying to fill the gap. Have the bears finally been defeated in the market? Because when we look at the fear and greed index, we are sitting at 24. However, when we look at the VIX dropped another 14% today, which is actually also a bullish scenario. However, is this nothing more than the VIX playing possum, getting ready for another leg up as early as next week? Now, in case you didn't know, next week, on Wednesday, we're going to have the CPI data coming out. If the CPI data comes out horrible, that's going to have huge implications on not only the dollar index, but also possibly the Fed's ability to start cutting rates. This morning, we saw Mexico actually coming out, cutting rates. However, this morning, we also saw that Mexico had soaring inflation and they still cut interest rates, which has us scratching our head. Is Jay Powell going to follow suit? Has Jay Powell abandoned the 2% inflation target? Now, as we come over and look at how the indices fared across the board, the Dow was up 51 points. The NASDAQ was up 85 points. S&P 500 was up 24.85 points. Russell 2000 was down 0.43 points. Now, as we look at advancing issues versus declining, we have 55.4% of issues out here advancing with 40% of issues declining. Now, what happened to roughly the other 4.3%? All right, I think someone's math is off here just a bit. Then we come over and look at the sectors across the board. Every sector except for industrials were actually in the green. Communication services leading the way out here. Now, when we come over and look at communications real quick, notice what we've had, all right? We've been able to basically fill the gap that we were gapped down on Monday. Now the question is this all she wrote? Is this going to set up an ABC pattern down, or will we see it starting to firm up? If we look down here at the MACD indicator for clues, notice what we have. We are below the zero line. We're starting to get a bullish cross of the MACD lines. Now, if we pull our Fibonacci retracement, measure swing high down here to the swing low, notice where we come up to, the 61.8. If indeed the market's going to go up, it is critical. It must break the 61.8. Then if we do, the next target's going to be the 78.6. We breach that, and that really increases the odds. We're probably going to come back up for a retest of the highs. And since we've already been up here in the past, we are likely going to come up there again and break through that levels. But we got to be very mindful because we can see a quick little turn down, maybe setting up a higher low, then setting up an ABC pattern that actually takes us towards that area. So that's something we want to keep on the radar for next week. Now, if we look at financials today, financials were also on the move back up, and it looks like they're trying to make a move back up here towards filling the gap. Now, one thing that we want to look at when we look at financials, notice we had a double top pattern. Top number one, top number two, that gives us a price completion right down here. You can see we overthrew that price completion by a little bit, now has been on the way back up. So is that all she wrote, or are we now going to try to work our way up, maybe filling the gap and then setting up another leg lower? Or is the bears done for the year? Is it going to be nothing but buy every single dip? Or is it going to be time to sell the rips? You guys, let me know what you think in the comment section down below. We look out here at some of the stocks. We take a look at NVIDIA, the leader of AI. And today, NVIDIA was down 27 cents on the session. Now, yesterday we did close with a hammered candle, and we have more than completed an ABC pattern to the downside. We look at SMCI, which after earnings has been getting croaked. And let's not forget, SMCI has the potential coming all the way back down towards this previous consolidation area, aka the high volume area out here on the composite profile. Then as we come over and take a look at crude oil today, crude oil was also on the rise once again. Now, crude oil rising up higher is also going to be a problem when we think about inflation. Higher crude oil prices or energy prices not only cost the consumer more at the pump, but it's also going to cost more to ship goods around the world. We come over and take a look at the precious metal gold. Gold today basically closing with a candle of indecision. That's what we want to think about from today, a candle of indecision. And the reason why I say this is we come over and we look at the diamonds real quick. What do we see? Basically a wick on the top of the candle, wick on the bottom, still has not been able to come up and essentially fill the gap. And you can see we're really having a hard time at the 38% retracement. If we start to come back down from this level, that's going to increase the odds of a double bottom pattern. Small caps today, not really able to get the push up and out from yesterday's inside candle. We basically have a hanging man candle, which also is not the most bullish of candles. Then we jump over and we look at the QQQs, and we see the Qs trying to firm up, Qs pushing up a little bit higher. However, not able to start filling the next gap just yet. But when we look at this on the 30-minute chart, notice we haven't really pushed up and out of this area. We went up a little bit today, but not really the push up and out I was hoping for. Now, we do still have gap resistance as target, up about 453.67. MACD indicator lines are kind of pinched very close together. Then as we come over and look at the futures markets, I want you guys to pay very close attention. We have a D as in dog shaped profile. And notice, what do we do today? Nothing more than a consolidation. One of the targets that we talked about this morning was where? Right down here at the point of control. And then we rallied back up, closing near the highs of the session. Now, right now, we are closing above value area high. On the weekly profiles, we're unable to make it down towards some of the lower level targets. We still have an untested value area low from last week that next week could be the time where we see that level finally come back and get tested. We look out here on the ES futures market. Notice we've been watching this ABC pattern to the upside at about 54.18. We did not make it out there today. However, it doesn't mean all is lost because today's price action was actually constructive. We've had that big push up and then a consolidation back and forth. This could be working off that upward momentum that we saw, getting ready for another leg higher in this market. Then as we look at the 30-minute chart, similar to NASDAQ, we formed a D as in dog shaped profile. Now with the S&P, we did close slightly below value area high. And we got to ask ourselves, are we getting ready to do a luck above failure? When we get a D-shaped profile, one thing that we do want to be mindful of is the first way we break quite often ends up being nothing more than a false break. So if you're bullish to market, you would prefer to see Sunday night actually go down a little bit first and then firm up and start to go up a bit higher. Fake out all the bears to the downside, set a trap, and then go back up, because as we start coming up, we want to be very open-minded that this could be nothing more than a trap. However, we still have some untested point of controls above us that could come back and get tested at any moment. Today was another great day trading the Apex PA accounts, and I was able to pass my third MyFunded Futures account. If you guys would like to trade with either Apex or MyFunded Futures, do yourself a favor, use the link in the description box down below, and remember, code Mike will always get you the best deal.